Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Welcome to the Market Chameleon pre-market show, where we go over everything Market Chameleon related. And here he is, the King Chameleon, all the way from Philadelphia, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Perfect.
And I will share my screen. Let me do that real quick. So, as usual, and if you guys are joining us for the first time, we are open to questions. So if you have any questions on Market Chameleon tools, data analytics, you want to talk about strategies or trading experiences that you've had success with, or maybe that you've done something and we're not expecting, this is a good time and a chance to bring it up, because not only will you benefit, but everybody in the community will benefit from that experience. A couple ways to ask questions. You could type them into the chat, live chat. Will's monitoring them. He'll read it back to me. We also put out a link to Zoom. If you click on that link, it takes you over to Zoom. When you get to Zoom, click on raise your hand. You don't have to turn on your video camera, but this will allow you to ask your question directly and live. So those are a couple ways to do it. While we're waiting for questions to queue up, we'll start out taking a look at the pre-market report, see what's trading in pre-market hours. Maybe you'll take a quick look at earnings, because we're starting out the earnings season. So I think we're like maybe JP Morgan already reported. So we're starting to kick off with the banks. So we'll take a look at that. But if questions come along, we'll take those. Sound good, Will?
Perfect.
So this is pre-market report. We have our most active stocks trading in pre-market hours, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 94 stocks made our percentage gainers list, 28 made our percentage decliners list. So right now, from that perspective, it looks like we're setting up for more bullish bias at the open. So I'm going to filter out this list, because this has stocks that are low cap stocks, ETFs, leverage products, closed-end funds. All these are included in there. So to get a sense of what's going on in S&P 500 stocks, we're going to filter out this list. And I'm going to use the filters here above. And this filter in ETF, I'm going to drop it down. I see SPY, that's the S&P 500 ETF. By selecting SPY, the list below will get filtered by holdings in SPY or the S&P 500 constituents. So here we see 19 stocks made the percentage gainers list, 8 on the decliners. So 2-to-1 ratio favoring the bullish side. The list isn't great. It's not huge, but nevertheless favoring the more of the bullish side. And but we've seen right now, I'm seeing the airlines, looks like all the top ones are airline stocks. But we've seen those going back and forth, right, from day to day. And I think JP Morgan actually reported.
Yeah, well, the airlines are starting to show pre-COVID numbers, like starting to see record bookings going into the summer season. So I think that's maybe why they're up.
So people are traveling after maybe a lot of pent-up demand to leave the house and go travel. So they're still benefiting from that. But at the same time, with the oil prices fluctuating high, I think that also impacts them negatively. So we've seen a lot of volatility in those, and in the SPY yesterday, I think as S&P was up, looked pretty good in the beginning of the day, turned around, sold off, then ended up down on the day, like 0.5% or a little bit less than 0.5%. So still very volatile. And I think if inflation continues and we see slower growth and higher interest rates, I think that the volatility is going to persist for a while, because those are really conditions where, markets will be volatile. So no, no questions right now. Well, maybe I'll take a look at an earnings report.
We did have a question from a new chameleon. I'm trying to get an answer. It's from Tyson. He was asking, when I click pre-market, I can't see puts and calls for the day. He wants to see, I guess, basically what the options were doing the day before, because there are no puts and calls that trade in the pre-market. Isn't that correct?
Yeah. So when we're looking right now at the pre-market report, these are stocks that are trading in the pre-market hours. And stocks can trade in pre-market and after hours. So there's a regular session 9:30 to 4. That's when you have regular trading, and at that point you have really like all the participants are able to trade from 9:30 to 4. You have mutual funds, all kinds of institutions. They could trade during regular hours. Outside, pre-market and after hours, they can't. So many customers might not also have access to it, because your broker has to allow you access to trade in pre-market hours because it's less liquid, right? Different rules in place. Reg NMS rules are not in place. The specialists and market makers don't have the same obligations. They don't need to participate, I think, in the extended hours. So that applies to the stocks. So stocks can trade in pre-market hours and after hours. Options, they're not trading in the pre-market hours. They start during regular hours. I think maybe some of the index options can trade, but if you're looking at individual stocks, there is no calls and puts trading in the pre-market, right? You could get it from the day before to see what it was, but not today. The trading in the options market will start after regular session, which is 9:30 is the opening for regular session. If you want to see just yesterday's, though, type in a symbol. Let's say I'll go to SPY. So right now I'm on SPY, and then over here you have two charts. One is this is the stock, what the stock did yesterday, and here you kind of have, there are different options, but we track the implied volatility of the options. So this over here is the implied volatility in SPY 30-day IV, but here you see 42% trade in calls, 58% were puts. This is how it was throughout the day. Again, that it's not pre-market, right? This is yesterday's from 9:30 to 4 volume. So I think that maybe even the ETFs trade in extended hours after 4. I don't know the list of all of them. SPY, QQQ, they trade, I believe, till 4:15. I'm just going to take a look real quick. So here are yesterday's block trades, and you can see here 4:15. We see trades in VXX, QQQ, SPY. So they do go past 4. So some options, go in extended hours up to 4:15. Not all of them, but some of them do allow trade till 4:15. So it looks like I can see trades in VXX, QQQ, SPY. You see maybe ZWM, but that's the way trades. So you can see from previous days or go back in history, but not pre-market. There's no calls and puts trading for an individual stock.
Do you think options will ever be able to trade on a 24-hour, 7 days a week, 365 days a year like cryptos? Well, options and stuff.
That's what I think. I think that should be happening eventually, because if you could do it in crypto, all right, so the crypto are able to do it and they're clearing if you're looking at our system right now of trading stocks and options, it looks like a legacy system, because one of the issues is there are a lot of middlemen, a lot of intermediaries in a trade, and the clearing takes a while. So, if you take cryptocurrency, they clear in seconds, right? A stock trade takes 2 days to clear, something like that. A day, an option, same thing. So it looks like an old system when you compare that to what's going on in the blockchain. The blockchain is not quite there. I don't think it could handle as much as we are on the stocks and options yet, but it's getting there, and it just makes sense to have 24/7, because it seems to me, at least, unfair that the hours are 9:30 to 4 p.m. Eastern time, which are those are banking hours from 50 years ago, 100 years ago, which is convenient for New York City bankers, but people are trading stocks and options across the globe, and it doesn't seem to me that it makes sense to not have trading really 24/7, 7 days a week. I don't see why not.
Yeah, I would agree.
So I think eventually there'll be a push, and there are applications right now with the SEC to start 24/7 exchanges. I think there are some applications out there to do it. The difficult part is that our rules right now are set in ways that didn't envision it, right? They didn't, the rules are only developed based on what they see in front of them, right? And they have these Reg NMS rules. You can't trade through exchanges. You can't trade through protected quotes, all this stuff. So all these exchanges now are interdependent. It's like this one big network that has to work together. And that, there's some benefits to it, of course, but there are also drawbacks, and that's an innovation. So nobody really can think outside that box, based on even legally, right? Because you have to stay in that box that they created for you. So we have like 15 exchanges, 16, 20, I don't know. We have all these exchanges, and they basically just do the same thing because that's the regulation, right? So they can't, they're forced to basically act in the same way because of this Reg NMS. And these rules were developed a long time ago. We still have them, but they were developed a long time ago, and supposedly it's supposed to be saving people money.
Interesting. That's for sure.
Yeah. But I do think that the blockchain technology, as it gets better, may force the hand of the equity exchanges, options exchanges, and it'll be better for capital formation too. So I do believe that if people have ever dealt with clearing firms and institutions and banks, like we did, and what's involved, and then you kind of like take a look at what the blockchain is trying to do, and they're doing it with cryptos right now, but there's no reason. Stocks and options are basically digital assets anyway, right? We're not holding certificates outside in the street trading them. It's all digitized anyway. So if you look what they're doing with the blockchain technology right now, it looks like that technology should replace what we have currently. So there you go. Any other questions, Will?
None have popped up yet.
Okay. Let me take a look at, on the earnings front, let me take a look at this chart here, and this will just show us yesterday's. So just to give you an idea what we're looking at is, this is kind of a visual of stocks that were reporting earnings either yesterday after the market closed or before the market opened. And I do have preset filters here that the stock has to be about $25 and trade on average 2,000 option contracts or more. And in the graph, what we're looking at is there are three stocks that popped up: JP Morgan, Delta Airlines, BLK, that met these conditions. The circle, the blue, is if you go across, this is what the straddle was implying these stocks to move up or down the previous day. So, JP Morgan, based on the straddle closing, they were implying that the stock could move up or down as much as 3.9%. Okay. Delta Airlines, I'm hovering over 4.8%, BLK 3.6. So that's where the straddle went out. So if you bought the straddle, buying the call and the put, you want the stock to move more than that to cover the cost of both options, and then it'll be profitable beyond it. If you sold the straddle, you want it to move less than that because you're trying to collect that premium. And that's the blue line. The orange line, that's a baseline for how far away it is from the last 12-quarter average actual moves. So you could see that each of these were above their 12-quarter average moves. So Delta, it was implying 4.8% move. On average, in the last 12 quarters, the stock moved up or down 2.5%. Okay, so that's the orange one. So you could see from 2.5% to 4.8%, it was implying the implied move is above the 12-quarter average. And you could change that baseline over here by this drop down, looking at the biggest move it had, the implied moves, so I'll get back to that one right now, but let's keep it at that 12th quarter. So yesterday, this is what you'd have seen yesterday during the day, the baseline and the implied moves. This long line here then is saying, okay, the stock reported earnings probably yesterday after the market closed or today before the market opened, and it's starting to move. So then it's comparing today's move to the implied. So JP Morgan can see that when it's down, so all these are down, so far the move in JP Morgan is below yesterday's implied. So JP Morgan, let's take a look at it.
Hey, D, can you just, we're getting questions. Can you just show us again how you got to this page?
So earnings up top, and then I'm coming over down here, implied move charts. Okay.
Perfect.
So today, I'm getting kind of a sense of, well, how are these stocks moving relative to yesterday's markets and historicals? So this is once you kind of understand it, then it's very easy to see what's going on, right? So here on JP Morgan, let's just analyze this. Top one, that blue dot, is saying that the straddle was implying a move of 3.9%. Buying a call, buying a put, the stock had to move 3.9% to cover that cost, up or down. The orange going all the way down the baseline is saying that in the last 12 quarters, on average, JP Morgan moved up or down 2.4%. So you could see there's about, between yesterday's implied move and the 12-quarter average, we got a 1.5% premium or differential between the implied and historical average. What was the actual move? So, we won't see the total actual move till the end of the day, so it can still go up or down. But what is it doing so far in the pre-market hours? JP Morgan is down 3%. So you can see 3% is right there, that star. So it's below the blue dot, which is the implied. It's above the 12-quarter average, which is 2.4, right? So the move is, remember, everything's in absolute terms here. So 3% so far, that is above the 12-quarter average move, but it's below what the options closed at, what they were implying yesterday. So it's right in between. Okay. The Delta, let me see Delta. So here's Delta. That's one's very close. So yesterday, straddle went out. It was implying 4.8% move up or down. you could see that if we look at the baseline to the orange line, it's above that orange line, right? The orange line was saying on average, Delta moved 2.5% up or down, either direction. So right now, we don't, today's move will start later, but so far we're getting a sense of what it's doing in the pre-market. It's up 5%. So it's right there where the straddle was implying, a little bit higher. That's why we don't even see that line, because it's probably right on it. So right where the straddle is implying, above the 12-quarter average, obviously, of 2.5%. BLK, we'll take a look at that one. So this is what you're going to see this during that you come back here after the market opens. You're going to see the next stocks that are going to be reporting either today after the market close or tomorrow. So you're going to see the blue dots and base without the actual move, because obviously the actual move comes after. So BLK, yesterday we could see the blue dot, the straddle was implying a move of 3.6% up or down. That's above its 12-quarter average of 2.9%. And so far, it looks like the stock is unchanged in the pre-market hours. So, it could, once the market moves, opens up, that could change. But right now, it's not doing much in the pre-market hours. So that's a quick way to kind of see what's going on in stocks that are reporting earnings relative to how they moved historically and what the options were implying prior to the move. And if you change these parameters, bring down, let's say I want to look at stocks above $10. So I'll change that so you could see now more stocks popped in. So I got now BBY. So BBOY popped in, or BBBY, right? 3 Bs. That straddle yesterday, you could see on the high end, it was implying a move of 16% up or down. That's above its 12-quarter baseline, 12-quarter average, 13.8%. So 2.2% premium over its 12-quarter average move. Right now, in a pre-market, the stock's down 13%. So you could see here below that 16% implied move, and below, so far, it's moving less than its 12-quarter average. So that's really quickly, and I could start, I could bring in 1,000 contracts that might bring in, so that brought in more. So that's how, yeah.
Rob wants to know, does the implied move on a straddle give you a break even, or do you need to put it into the calculator to look for that?
Well, so the implied move, what it does, so when we look at an option straddle, right? If you're buying a call, you're buying a put, let's say a stock is 100 and exactly 100. And if you buy a call for $5 on the 100 strike and you buy a put for $5 on the 100 strike, well, you need the stock to move $10 up or down to break even, right? Because it has to cover the cost of both. You pay $10. So if it goes up, right, the put will be worthless that you bought, but the call needs to be worth $10 at least to cover the cost of both. And if it goes down, the call will be worthless at expiration, but it needs to go down. The put has to be worth $10 at least for you to break even on the cost of both. Now, obviously, this stock price is not always at a strike price, right? The stock prices are moving around, so we have to create a synthetic straddle based on the implied volatilities. So what we're looking at is, this is the implied move. If we use them using the implied volatility surrounding information, and we created a synthetic straddle that was at the money, at the strike. So, if the stock is $101, but you don't have $101 strike, you'd have to say, okay, based on the surrounding data, if I created if I was able to create a 101 strike, what would the straddle imply the move? So that's how this is being calculated. So, and for the seller, by the way, that's also the break even, right? So for a seller, if you same scenario, stock's at 100. If you sold a call at $5 and you sold a put at $5, well, if the stock moves up, yeah, the put you sold is worthless. But if the call is worth $10, you have to buy back for 10. That's your break even, right? Because you collected 10, you paid back 10 to come out of the call, so that's your break even as well. So for the buy, it's where the buyer and seller exactly break even, right? So both, neither side wins. That's the implied move, where neither the buyer or seller wins, they both break even. That's the implied move.
Hopefully that helps, Rob.
So I guess if there are no questions, Will, I'll just kind of stop it right there.
Well, there was one question today. Someone brought up, and I think it was the mayor, was asking about an MC convention. If there was a Market Chameleon convention in Florida hosted in Mike's hometown of Naples, would you attend?
Yeah.
No, I'm asking you, D. Would you attend? If there was a Market Chameleon convention in Florida hosted.
That is tempting. That is tempting. Always to go to Florida is an excuse to go to Florida is always tempting.
Yeah. Surprisingly, only 10 people voted, but 90% of the 10, so 9 votes, one of which I must say was myself. I voted yes in the in the poll. But
it would be fun.
Yeah, it would be fun.
That would be fun. That would be fun. An MC convention. We got to think about it.
Could be something to come in the future. I certainly like going to Florida. It would be nice to meet everyone. But we have people from all over, and it would be a heavy lift for everyone to get to one spot for sure. And listen, we do a convention every day on this pre-market show. Everyone can get together and talk about Market Chameleon and what they're seeing and how they're viewing the market and what they're using the Chameleon for. But D, great job. Thanks so much. Just a reminder, I leave for Florida after this show with the kids. So I will be traveling with my laptop, and I will post tomorrow from the back of my in-laws' house in Florida. So
awesome.
We'll give it a remote try tomorrow. Hopefully everything works out, just so everyone knows the backdrop will be different tomorrow. All right, D, great job, my friend.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, community. We will see you tomorrow. Bye-bye.